Maximus Analysis here for February 8th, 2016. At the close, we see that we had a pretty good respect of that level that I posted, the 1828 level. Again, I want to see how they react for the next 2 days. Okay, I want to see if they're also going to get above, or how they're going to break above this 1920, 1912 area. Can my big kind of break in the sand, or break line in the sand to break, is the 1850, but again, it's to stop tapping it. So again, we also had a break of the 1871, which we've been speaking about last week, so that it broke below it. But again, I want to make sure that they're going to close below it. So I want to see what happens if they rally, and how the rally looks up to this prior sell point, which is around the 1913 area. So being very cautious not to go short late, because again, there's a lot of people that might have shorted this breakout and they're going to get squeezed out, especially on the futures that is very, very corny, to say the least, because of how much pain you can get, because most people are not going to put their stop all the way up here, or the stop should actually be 1940. So let's look at the NQ. And we can see we had a little bit of bounce as well. They're below 4,000, but they have a bounce so far. So we want to see how they react going back into this, if they have a proper bounce to sell a rip. So again, being overzealous regarding a short at this time means that hopefully you scaled out so much that you only got a runner and maybe stopped out. But again, look for the short in a proper fashion. The YM again gave a very big, you can see right here, just these highs connected, that you can see that they regained it. So I want to see if they're going to get back above this 16,450 area. Okay, 1 or 2 days doesn't break that, the fact that we do still have some type of bearish flag setting up. We had CL, excuse me, again continuing to the downside. So again, it looks like again another break of 29, and they could see that 25 area. I don't know about 18, but I won't put it past anything in regards to that. All right, so let's look at some of the names. Again, I haven't seen price line under 1,000 in a long time, and they continue again we want to see if they're going to give a good retracement to sell into if you're not short already. You had Google actually was up, so again it gapped down and closed back up, but again I would look more for just a single day pop versus to try to get this right now, unless they really gap back up onto the 750 type of area. LinkedIn, again, something that I've never seen somebody give up half of their market value in earnings, but again, it is half. Before earnings was 200, now it is at 109. I've never seen anything like that. So I would then, go back into the weekly, and you can say, all right, I'm not touching this in regards to anything regarding a long. But if I do, it would be that I have to look at oversold territory and trade it accordingly. Not, I don't want to try to get into a short now. You're late to the dance. But again, if you're looking to go long, you have to at least see some definable support, and there would be nothing wrong with going with a long, because most people probably trying to go short anyway. So if you get a pop above this high of 130, I guarantee there's probably going to be a lot of people going short just on this candle alone, because they're just chasing and saying, I wanted to get short here, but I didn't have the capital or the risk management accordingly, so I'm going to get short here and pray that it just continues to waterfall down. You just don't want to be in that state. So Apple is up $1, still in a weak type of position. Again, if you're going to go long, your line in the sand is right here. Okay, based on also the August lows as well, we're right back there. So that's where you need to be. Facebook, we can also see that again, you want to see a break above at least this high if you're going to get in. Again, they fully filled the earnings gap, so now you have to play it accordingly. And a lot of this thing is, again, for aggressive selling, aggressive purchasing and selling, meaning you're trading a couple hours a day, or you're in a trade for a couple hours and you get out, because it's just been that type of environment. Because a lot of people that might have went long over the weekend were stuck holding the bag unless they had shares, which a lot of people don't trade anymore. unless they're day trading. Mostly people I see that trade shares are day trading just because of the leverage provided with options, but with leverage comes responsibility. Fitbit down another $1, continuing its spiral to the downside, and Amazon was off about 14 bucks. But again, even if it gave a quick bounce up to the 200-day moving average, that would be something to short into because of this previous pivot low of 550. So it would be something that if you're going to go long, again, on an oversold bounce, just have your targets accordingly. Don't have them looking all the way up here. Have your targets accordingly if you're going to look. And then, of course, if it runs back up, you're in early, but you can have a very small risk and a good reward if that's what you play consistently. So overbought and oversold condition strategies work great. Okay, so and that, actually I know a lot of people that really like to buy when things look the worst or look the best, or short when things look the best because of how quickly either you're right or you're wrong, and you could use small stops regardless. So we'll see how it goes. We're going to be also looking at, you see bonds exploded. You have the ZF right here. You have ZN as well. That's the 10-year. Continuing to explode. So I don't know if it's a flea stocks go into bonds type of thing going on right here, but we just wanted the ZB, which is what is the ZB? I forget off the top of my head. I think that might be the 30-year, but you could see that the bonds are really moving really hard. And also let's look at the excuse me, the GDX to see where gold is, and you can see that gold kind of popped up as well. So again, we'll see. Again, aggressive trading is where it's at right now because of the nature of how volatile things are. And again, if you have your defined stop, and let's say you want to get the ES and using the SPY, you know kind of where your line in the sand is. It's here or it's this low, and you'll see if you get a pop above it, and you could take the trade. So again, but if this is the type of trade you're used to versus waiting for the pullback and see what type of strength they have. But let's see what happens. I know they got it's always like this, the Fed is always talking, but again, we'll see what they do on Wednesday. But again, it doesn't mean that again, if you don't trade that, you'll never trade. So just trade your plan and keep and respect your stops. Take care.